Hi, hello, greetings from Archaeversity. This is Professor Ramkrishna and welcome to my online lecture portal. It is Archaeversity, a YouTube channel, and I also have a website that is archaeversity.com. In addition to these two, I also offer online courses on various online portals like Udemy, Teachable and Coursera. When time permits, please do watch my lectures on different topics of finance and accounting, statistics, as well as courses like data analysis and software applications like Microsoft Excel and SPSS. You can download the playlist from my website, that is archaeversity.com, and watch these video lectures anytime, anywhere at your convenience. So coming to the topic of the day, in this lecture, I'm going to explain you how to write journal entries for tax adjusted. In the sense, in an economy like India, when a service is offered or goods are sold or purchased, you have to pay or receive or deduct the tax that we call as a GST, that is a goods and services tax. So this goods and services tax has got two components. One is a CGST, that is a central goods and services tax, and another one is a SGST, that is a state goods and services tax. So you have to mention these two separately along with your transaction. So using a few examples in this lecture, I'll show you how to generalize the transactions in the context of a CGST and SGST. To write a tax adjusted journal entries, we make an assumption that the central goods and services tax is at 4% and state goods and services tax is at a 4%. So when we say that the GST, this is goods and services tax, and C is for central and S is state. So central GST is 4% and state GST is another 4%. Now the first transaction is Sumit bought goods worth rupees 2 lakhs on credit from Rajat. So here two accounts, or this transaction has got two items. One is your purchases and the second one is the credit, that is trade payables, or we can say that creditors also. In some books we use the creditors, but preferably considering the company accounts and all, we use the word trade payables. So purchases is an expenditure, trade payables is a liability that we have to pay. So here what is happening? Expenses, there is an increase in expenses and also there is a increase in your payables, that is so when there is an increase in payables, we credit this account, and when there is a increase in expenses, we debit this account. So using this, we'll write a statement like purchases account debtor. This is amount is 2 lakhs. Then you have to calculate your CGST of 4% and SGST of a 4%. So in case of a purchases, we'll have a input CGST. This is at a 4% on 2 lakhs. So that means 2 lakhs into 4 by 100. So this is going to be 8. So 8,000 is your input CGST. Then you have a input SGST. So this account debtor, another 8,000 to trade receivables, trade payables. So total amount of trade payables is 2 lakhs plus 8 plus 8, 16,000. So 2 lakhs 16,000 is the trade payables. And the narration that we are supposed to write here is being goods purchased on credit from Mr. Rajat. So this is the narration. Now this is how you have to incorporate input CGST and input SGST in your transaction. Next is Sumit sold goods to Kaja on credit, that is a rupees 2,80,000. Now one is a sales and second one is trade receivables. When you make an sale on a credit basis, this is trade receivables, or we can say that debtors. Now sales is your revenue and trade receivables is an asset because you have to receive amount from Kaja. So there is an increase in a trade receivables. Also there is an increase in a revenue. When your asset increases, we debit the account, and when revenue increases, we credit the account. So now what is that we have to write? Here is our journal entry is trade receivables account debtor to sales account, then to this time it is a output CGST account and to output SGST account. So what is the sales amount? Your sales amount is 2,80,000 and your GST is 4% on this. So 2,80,000 into 4 by 100. So 400, 400, 8 4 is 32, 2 and 3, 4 2 is 8 plus 3, 11, 11,200. So 11,200 and another 11,200. So this total is your trade receivables. That means 3,02,400. 3,02,400 is the trade receivables. Next, paid transport charges of rupees 10,000. Here two things. One is your transport charges and the second one is your cash. So transport charges is an expenditure, cash is an asset. So what is happening with your expenses? There is an increase in expenditure and there is a decrease in your asset. When asset decreases, we credit it. When expenditure increases, we debit, and we also add the input CGST. That is transport charges, this account debtor, this is how much? Rupees 10,000. Then to this we'll add input CGST account, that is at a 4%. So 10,000 on this 4%. So this equals to 400. So 400 and then input SGST account and debtor, this is another 400 to cash. So cash is 10,000 plus 800. So 10,800 is the cash. This is related to the expenditure and adding your GST. Next, bought printer for rupees 20,000. So here one is a printer. This is an asset. Second, you have a cash. Cash is also an asset. So there is an increase in asset, that is a printer, and decrease in asset, that is a cash, because you are paying out the cash. So increase in asset is debit and decrease in asset is a credit. In addition to this, you have to add the input CGST. So what journal entry will be printer account debtor, then input CGST account debtor, then input SGST, that is a state GST account debtor, to cash account. So what is the printer cost? Printer cost is 20,000, and on this 4% is CGST. 4% of 20,000 is 800, and 4% state GST is another 800. So the total amount is 21,600. So this is your cash account. So when you have taxes, whether it is a GST or any other taxes that you have, and whether you are paying a tax or you are receiving the tax amount, you have to create a separate statements or separate entries in your journal book. So this is how you have to do. When you have a purchases, you have an input CGST, and when you have a sales, then you have a output CGST. For expenses and assets, input GST. And suppose on the other hand, if you have income received in the form of interest, commission and all, then you will have a output CGST. So this is related to the tax adjusted journal entries. In my next lecture, I am going to explain you how to write a journal entries in the context of a accrual accounting. Thank you for watching the lecture. Keep watching and enhance your knowledge in financial accounting with my videos.